Welcome back, and joining us on the show now is David Tait. He's CEO of World Gold Council. David, hi, thank you so much for joining in. And you are in India, and I'm hoping you're having a good time here. And when you look at the gold prices then, and they have had a stupendous year as well, the best year since 1979. How have you seen the year 2025 in sense of prices and sense of demand as well?
Well, I've been very, very happy with the price rise over the course of the last year, as you would expect, given my role. It has been somewhat spectacular, even by our estimations, I have to say. Over the course of the year, we've obviously seen continued central bank buying. We've seen all the major buyers that you would expect get involved in gold. We've had some notable events. We've had deregulation in China, which has made a big difference. We've seen a huge growth in ETFs in India, and which I expect to increase over the forthcoming years. You've had Japan has adopted gold in a major way over the course of this last year, which we expect to continue as well. I mean, quite frankly, they're suddenly discovering what inflation is after 30 years and a little bit of geopolitical risk. So I expect to see great things happen in Japan. And then, of course, the old classics, shall we say, the normal economic stuff that we've grown to know and love over the year has supported gold. Then we've got the interest rates and dollar, which have all done their part. But most importantly, we've had a never-ending burden of ever-increasing debt. So whichever way I look at it, there are a whole variety of things which are continuing, which have supported gold over 2025. And frankly, I don't see changing going into 2026 at this moment. I do think there is one scenario, though, which could change everything, but I'll leave that one for later.
No, that's coming up exactly the second question. So what do you feel? I mean, is it safe to say that the gold prices will continue to make higher highs, because both banks and brokerages believe that we are headed towards 4,500 and 48 and 5,000, also a possibility in 2026. You're saying that there is perhaps going to be a reason that we will not see those numbers there. What is it according to you?
Well, actually, no. I have 6 or 7 main reasons why I think it will continue higher. That's probably the way I should couch it. I'm firmly of the belief that it will go higher for those 6 or 7 reasons. But I can see one situation where I think it could, people could start to view gold differently, but that's probability adjusted, very low probability. And that is if the United States, for instance, Mr. Trump, gets very lucky, manages to spur 6-7% growth in the United States with moderate inflation, and is able to project a declining sovereign debt level. At the moment, we know it's $37 trillion, and he's doing his best to force down interest rates to generate enormous amounts of growth. I think that's the game plan. And if he is able to suddenly project that in 2030, 2032, the overall debt burden of the country will start declining, that will probably give a number of people who have been convinced that buying gold is the right thing to be doing because of currency debasement, because of the threat of runaway debt burden. I think that is a scenario that could start to raise a few doubts in people's minds about the future of the gold rally. But I must stress, I think that's an incredibly low probability for him to be able to pull that off. Okay. It's the only scenario I can imagine that will probably put a dent in gold's rally. And like I said, I think there's 6 or 7 major contributors to why it's going to go higher. And some people are talking incredibly high numbers for gold, and I would not be surprised.
David, let's talk about the investment part as well. And we've spoken about ETFs, but there has been a lot of retail investment and physical investment as well that we've seen, especially in India and other parts of the world as well. This also is going to be one year when the investment is perhaps at very, very high numbers. How are you looking at retail investment going forward for the Indians? Because of the rupee depreciation, the gains are even more sweeter there. But how are you looking at overall investment globally? And second, how do you look at gold buying in sense of India as an impact?
Yes, we've seen over the world the desire to invest in gold is somewhat different from the jewelry market. The jewelry market has obviously taken a hit because of the increase in price, and that's to be expected. But that jewelry market also is very durable. It does come back once the price sidelines for a little while. And frankly, just above $4,000 it has done. And the jewelers I spoke to en masse yesterday, they were seeing relatively good pickup in their showrooms. However, it is the investment bar and coin from a physical perspective, and the ETF world that has seen the major increases over the course of the last year, and I expect to continue going into next year for the reasons that I've largely mentioned. I think most people in the world are now very, very alive to the fact that the financial situation throughout the world from a debt perspective, as I said, is threatened. And there are not many prospects of that improving anytime soon. Many of the countries, at least in the West, are suffering from almost non-existent levels of growth, and yet ever higher burdens of debt. Take the UK as an example. It cannot seem to find a way to cut its own costs. That sort of scenario to the average investor lends itself to a threat to its currency of each of these current countries. It feels like the financial situation is failing. And that is a perfect scenario for people to get involved in gold. And so investment bars and coins I expect to continue to be very well in demand globally. Okay. But I would say probably the keenest opportunity for India will be the growth of the ETF market and gold funds. Because you've got a large younger generation coming into an awful lot of money and learning about financial markets and gold in particular as an investment asset, coming from a very low base. And the opportunity they have is to not be frightened by the idea of an exchange-traded fund, which sounds awful grand, but is essentially a very simple tool. And I do believe having access to mobile phones and their willingness to experiment will mean that you'll see a whole generation start to invest and hold gold in this form going forward.
So, well, 25 has been a great year, and 26 perhaps would see a spillover of great demand. And of course, as you said, more awareness about financialization of gold in India as well. David, as always, thank you so much for joining in and making sense of what to expect from gold in the next year too. With that, go for a very short break, come back and talk more about markets.